If you're looking for discounted dividend stocks, then you can start and end your search with the real estate sector. Popular ETFs like VNQ and SCHH are both down over 30% this year, and fan favorite REITs like Realty Income and American Tower Corporation are seeing substantial losses as well. But to be honest, guys, none of these are down nearly as much as the 7 real estate investment trusts we're talking about in today's video, which are taking the biggest losses out of any other stocks in the sector so far in 2022. But real quick, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how to invest in them to create passive income and reach financial freedom, which is really what we're after here. So if you get excited about dividend stocks and hit that subscribe button, I'd love to have you follow me along on my investing journey, and I'd love to hear about yours. Now, getting into the first stock, we've got Stag Industrial, ticker symbol STAG, which is a real estate investment trust that focuses on the acquisition and operation of industrial properties like warehouses, distribution centers, manufacturing facilities, 4 of which are located where I live here in Las Vegas. And this stock is really taken a hit in 2022. They are down 39.68% for the year, and just in the last 30 days, they're down double digits as well, down 10.62%. Now, taking a look at the right-hand side of the screen, we can see they have a P to FFO of 12.71, which is not too shabby, and we'll talk a little bit more about the valuation in just a moment. But before we get to that, guys, let's take a look at the dividend stats. So if we scroll down here, we can see that Stag has a forward dividend yield of 5.25%, a very high-yielding real estate investment trust with not much dividend growth to speak of. 0.81% for the 5-year growth rate, which I guess is a trade-off for that high dividend yield, and they do have with that a nice dividend growth history of 10 consecutive years. Now, so far we've seen that Stag is at about a 40% discount for the year, and they have a nice high dividend yield with some dividend growth, but is it at a good enough valuation to buy right now? And going over to the valuation page right here, we saw a moment ago that the P to FFO was 12.71, which is about 1.5% higher than the sector median P to FFO. Having said that, the P to FFO is really not too bad right now, and it's right in line with the rest of the sector, and it looks like Stag actually has some nice upside potential. Take this with a grain of salt, obviously, but Wall Street analysts have a low price target for Stag of $33, a high price target of $45, and an average price target of $38.29, which is quite a bit higher than Stag's current share price of $28.32. Now, moving on to the second stock of the day, we've got Cousins Properties Incorporated, ticker symbol CUZ, which has a portfolio of premier urban office buildings located all across the Sun Belt in cities like Atlanta, Austin, Charlotte, Dallas, Nashville, Tampa, and Phoenix. And looking at the share price performance, Cuz is down a lot year to date, guys. They're down 45% in 2022, and just in the last 30 days, they're down a whopping 19.04%, so a huge drop in the last month. And zooming out across this 5-year period, I mean, you know, the current share price is $22.66, which is actually lower than where this stock was like when the pandemic first started. So at its lowest, it got down to about $23, $24, and right now it's under $23. So today you can get Cousins Properties for cheaper than you could right when the pandemic started. I think that's a pretty good buying opportunity. But diving a little bit deeper and taking a look at the dividend stats, you guys can see that Cuz is also a nice high-yielding dividend stock with a forward yield of 5.72%. The 5-year growth rate for this dividend is 5.76%, and it looks like they've been growing the dividend for 4 consecutive years. Now, taking a look at the valuation, Cousins Properties has a much nicer P to FFO than Stag did. Theirs is sitting at 8.3, which is about 34% lower than the sector median. So compared to the rest of the stocks in the real estate sector, Cuz is looking incredibly cheap. And Wall Street analysts are anticipating higher share prices for Cuz in the future. They have a low price target of $29 per share, a high price target of $43 per share, and an average target of $33.50, which is about $11 higher than where the stock is currently sitting at $22.70. Now, moving on to stock number 3, we are talking about Gladstone Land Corporation, ticker symbol LAND, which is a really unique real estate investment trust with a 94,000 acre portfolio of farmland that they lease out to farmers to grow their crops. And it looks like so far in 2022, Land is not harvesting some great returns. Year to date, they're down 45.26%, and in the last month, they are down, just like the last stock, they're down about 20%. So huge drop in the last month. Now, taking a look at the dividend stats, they have a forward dividend yield of 3.04%, which is, you know, a couple percentage points lower than what we saw from the first 2 stocks. They have a 5-year growth rate that's barely there, guys, 0.96%. That like hardly even counts as a growth rate. And they have a dividend growth history of 7 consecutive years, which is the highest we've seen all day. But I've got to say, compared to the other 2 stocks we've talked about so far, this one to me seems to be lacking in dividend stats. The other 2 seem to have more to offer. But hey, maybe Land will have a nice valuation that makes up for the lacking dividend stats. Let's go take a look. Okay, so this is actually looking pretty high. The forward P to FFO is 25.34, which is over 100% higher than the sector median. So even with the substantial drops in share price that this real estate investment trust has seen, it's still looking looks to be trading at a pretty lofty valuation, at least compared to the first two stocks we've talked about so far. But with a current share price of $18.41, it looks like there could still be some upside here, and at least that's what analysts are projecting. They don't have a low price target listed, but on the high end, they're anticipating $36 per share, and as an average, they're looking at $29.67, which is about $10 higher than where the stock's currently sitting. Now, moving on to stock number 4, you guys are going to know this one. We're talking about Digital Realty Trust, ticker symbol DLR, which specializes in data centers that offer the cloud infrastructure for over 4,000 companies, including some recognizable names like Amazon, Verizon, Adobe, LinkedIn, and Google. And year to date, guys, they are really taking a hit. DLR is down 47.62% in 2022, and just in the last 30 days, they are down a whopping 26%. Oh my goodness. Taking a quick little peek at that P to FFO on the right-hand side, 13.14 is not too shabby, and we'll talk more about that in just a moment. But first, let's go over to the dividend page and take a look at the dividend stats. Now, I've got to say, I'm liking a lot of what I see with these dividend stats. They have a nice high starting yield at 5.47%. They have a pretty respectable 5-year growth rate of 5.6%, which is a nice complement to the already high yield. And you know what? These dividend stats so far remind me a lot of what we saw with Cousins Properties, except DLR has a longer dividend growth history. They have 16 years of consecutive dividend growth, which is great. Now, getting back to the valuation, the forward P to FFO of 13.14 is only about 5% higher than the sector median. In its own right, the P to FFO is looking pretty good, and analysts are expecting higher share prices for DLR in the future, which is probably no surprise considering how down it is just this year. But at any rate, guys, they give it a low price target of $91 per share, a high price target of $190 per share, and an average price target of $141.95, which is roughly $50 higher than where the share price is currently sitting. And with that, I know this REIT is one of the fan favorites. I know a lot of you guys out there are fans of this stock, so let me know if you have some of DLR in your portfolio. I'd be curious to hear. All right, guys, now moving on to stock number 5, we are talking about Next Point Residential Trust, ticker symbol NXRT, which owns and manages multifamily investment properties like apartments and condos, primarily in the Sunbelt region, just like Cousins Properties. And at this point in time, they own 39 different properties in 10 different markets, putting them at a portfolio of 14,825 total units. Pretty wild. Now, you guys are not going to believe how much this stock is down so far in 2022. Year to date, they're down 50.76%, guys. Crazy. And in the last month, they are down a whopping 25%. Now, we'll take a deeper look at the valuation and share price in just a moment, but before we get to all that, guys, let's take a look at the dividend stats. And as you can see, they have a pretty moderate starting yield, 3.77%. Okay, that's really not too bad. If the share price keeps going down, maybe they'll dip into the 4%, but the growth rate is where this stock really shines. Look at that, guys, 11.5%, which is by far the highest dividend growth rate we've seen to date. As far as the dividend growth history, they have been growing the dividend for the last 6 consecutive years. So there's a little bit of history there. Now, the P to FFO is really not looking too terrible, 13.76, which is nearly 10% higher than the sector median. And it looks like there's still a decent amount of upside potential, which is no surprise seeing that they're down 25% in the last month and 50% just year to date. But at any rate, Wall Street analysts are giving it a low price target of $62 per share. They're giving it a high price target of $90 per share and an average price target of $73.86, which is about $33 higher than where the stock is currently sitting. So there is definitely some upside potential to be found. Now, this next stock, stock number 6, is one that you guys will likely have heard of. It's Medical Properties Trust, ticker symbol MPW, which owns and acquires hospital facilities. In fact, they are the second largest non-governmental owner of hospitals in the world. And they have a pretty globally diverse portfolio of properties. 61% of their properties are in the United States, 18% in the United Kingdom, 6% in Switzerland, and then we've got the other 15% or so spread out across the rest of the world. Now, I know the 50% drop in share price we saw with the last stock was pretty substantial, but guys, MPW is actually beating this. Year to date, they're down 53.22%, and in the last month, they are down another 25%. So big drops all across the board. And because the share price is getting so compressed, we can imagine that that dividend yield is just, skyrocketing up. It's currently sitting at 10.6%, which is by far the highest yield we've seen today. This is pretty unreal dividend yield, and they have a 5-year growth rate that's actually not too bad considering how high the yield yield is 3.9%, and this comes with 9 years of consecutive dividend growth. So that's looking pretty nice. And as far as valuation goes, overall Seeking Alpha is giving them an A+, which, you know, doesn't get any better than that, guys. And the forward P to FFO is looking incredible as well. 6.01, which is about 52% lower than the sector median. And this is also the lowest P to FFO we've seen all day. So, you know, MPW is definitely at a discount. No surprise seeing how much they're down year to date and also how much they're down in the last month. And as I'm sure you can imagine, there's some upside potential to be found with MPW. Wall Street analysts have a low price target of $15, a high price target of $23, and an average target of $17.93, which is about $8 higher than where the stock is currently sitting at $10.99. Now, stock number 7, guys, which is the worst performing stock I have seen so far in 2022, is Innovative Industrial Properties, ticker symbol IIPR, which has a portfolio of specialized industrial properties that they lease out to operators in the greenery industry, okay? And most of the properties they leased are cultivation facilities, which is where the product is grown. And I'm honestly just blown away at how much this stock has come down in share price, guys. Year to date in 2022, they are down 62.26%. Unreal. And just in the last 30 days, they, believe it or not, are up a little bit, 1.3%, which is very surprising. But getting over to the dividend stats, guys, oh man, I mean, look at that, guys. That is very interesting. 7.74% forward yield, incredibly high yield. That 5-year growth rate, I'm going to have to double check that, 86.67%. And they have 4 years of dividend growth. And I'm curious, if we go over to the dividend history page real quick and zoom out on this max chart, what is that looking like? So it looks like back in 2017, they were paying 15 cents per quarter for the dividend, compared to today, they're paying $1.80. So wow, guys, just in the last 5 years, this dividend has really taken off. At any rate, in terms of valuation, that forward P to FFO of 12.09 is 3.42% lower than the sector median. And with the current share price of $94.20, there does appear to be a bit of upside potential, at least if you ask the Wall Street analysts, who give it a low price target of $117, a high price target of $196, and an average price target of $158.83, which is about $65 higher than where the stock is sitting today. Now, if you guys thought these stocks were coming down in share price, wait until you get a load of the stocks in this next video. These are 3 dividend kings that I'm buying right now, all of which have seen massive drops in share price. So check them out right here, and I'll see you in the next one.